Okay, let's get into the stock market technical analysis. Just kind of seeing a market crash, obviously, today. It's not the most objective time to be shorting. If you haven't already shorted, again, I've been talking about the short entries for, about a month now. If I go over to the triple Qs, just kind of give you an idea of where I see things at, now. Okay, so on the daily chart, again, if you've been following me, we had this high here. We then barely made a new high, just marginal new high. Remember, momentum has been diverging. So that's kind of our tell. We've been diverging and extending, and the divergence has been building for a long time. So this new high here that we barely made, was a marginal new high. And then once we failed that level and came back below the former high, that's exactly where it was objective to short at. You had this big failure, really right here, back on February 21st that was your big failure, big impulsive rejection. That's the objective short, basically, right when you start to fail. That's where I was telling everyone to short, and you can go back and look at my video that I put out on that day. I have a video I put out. I'll give and just rewatch the video. I'll outline the reason of why it looked like a good short. Okay, so from there, we've now fallen about 12%. So I that's a pretty good drop. It's not objective to short now. Now we could crash. We've already kind of crashed a little bit from the highs. From the all-time highs, we are down 13% in really short order. Ultimately, we've wiped out the gains that have been going back to September of last year. So 6 months worth of gains wiped out in about 2 weeks or so, 3 weeks. But we're getting pretty stretched to the downside. So I think we're probably due for a bounce. I've been thinking that because if I look on the hourly chart, but this is the other thing I want to point out. On the hourly chart, we have a downward channel here now. This is the downward channel that I've been marking out. We still have bullish divergence on the RSI, but it's gone on the PPO. You can see there on the PPO, that's been negated. They've undercut that. So that's bearish to see that. If I look at the RSI, yeah, you still have it. Okay. So you don't have to have it on both. But to see it negated on one is kind of a tell. It tells me that the bounce will likely be short-lived. I think we probably can bounce. There's the bottom of this channel here. We've got 4 reactions now. So I think we can bounce off of that, maybe head to the top of the channel. If we break the top of the channel, I don't see us going much beyond literally this 510 area. That would be max bounce target. I don't think we would go much higher. 500 might be where this thing would stop short as well. So 500 or 509, either one could prove to be kind of resistance. But the fact that I'm seeing divergences get burned through, not completely burned through, but definitely the PPO, tells me that we are now in a sell the rip market, a potentially trending market to the downside, a bear market. All right, we'll just call it a bear market. So let me kind of look at the Mag 7s. Well, I'll go through where I think we're going to head when I look at the triple Qs on the daily chart. Okay, so there's that. If we're going to bounce, we're probably going to go, the 200 day, the 500. I don't even know if we'll get above there, but yeah, we could. The 200 day should prove to be some resistance though, so maybe we don't even get beyond that. Hard to say. On the downside, you've got reaction lows right here at about 448. Several reactions there. That was former resistance. Then it was support. Pretty good reaction level there. So I think we could, if we're going to crash and continue to drop, we could just, drop right down to that level. That would be an objective area where I think we could bounce. We don't have to though. So there's that. Really good support down here at 413, former reaction lows right in there. Okay, so that is another possible target. And then I do have another level right down here at 3. Sorry, the charts are slow today because there's a lot of traffic on them. 383 would be a potential another level. Very good support there. So again, we are dropping, and I don't see large indications that we're going to bounce. So I'm definitely not completely sold on a meaningful bounce, but given that we're pretty short, it would make sense that we start to see some sort of short squeeze happen before the next leg lower. Mag 7, bigger picture, Amazon at support right now, but below the 200. So, these need to recover the 200s. Until then, it's bearish. Bears are in control, but we're at support right now at about 194. Google below the 200s, hitting some support, but nice impulsive rejection today off those 200s with the gap down. So bears are in control there below the 200s. Meta above the 200s, hitting, there's support right here about 584-ish, okay? And then you have the 200s just below, so that might hold, but if the rest of the market's going to sell off, this isn't going to hold for very long, so keep in mind on that one. If you bounce, you could bounce up to 624-ish. There's resistance right up there. Microsoft well below the 200s. You can see tested it for a couple days. Tested it the third time. Finally just gave it up and is heading lower. And then Microsoft also, you can see here, you had some support at about that 386. You had a reaction there. Third reaction, they tried to hold it. So far today, that's failing, and there's only 30 minutes left in the day. So unless they can recover that, that's a sell signal in Microsoft. Apple bouncing off the 200s today, but again, we just recently tested them. You got a rally, and we're right back at them. So I don't know if they're going to hold, especially given the nature of the rest of the Mag 7s. I think these could break. They'll probably hold it today, but I definitely could see it break. If it does hold, maybe you have another bounce. All right, you could get that bounce in the markets. Again, I still see it as a sell the rip market. I don't see this as a buy the dip. We've obviously had a big dip. I think there could be a rally, but I think that's going to be an opportunity to add to shorts or to enter new shorts if you didn't already do so. Tesla smoked today, filling a gap, it looks like. Yeah, there's a gap fill right there. So again, you're probably going to get a bounce. There's a gap fill. And yeah, so I mean, it makes sense you'd probably get some sort of a bounce. But again, I don't see any bullish divergence here on the daily chart. So trending should trend lower. No real bullish divergence on the hourly either. So bounces will likely get sold into because there's no divergence telling me there's likelihood of a trend reversal. It just tells me that bounces will get sold into and the trend is down. All right, so that's what I'm seeing there. NVIDIA, I've always talked about this one being really key, and NVIDIA needs to break before the market breaks. NVIDIA is well below the 200-day moving average. You can see they tried to hold it here. You got the rally, but that's now failed. So rallies now will be into the 200, and that's where it should get sold into. Okay, you'll likely get rejected at the 200-day. Again, I don't see any real bullish divergence telling me that the trend has changed. So rallies, it's sell the rip. That's what we see. And then AVGO, this one's holding support. So this one's one of the stronger ones, actually. You have a uptrend line here to watch. And slight negative divergence. We can consider this negative divergence. We're at support right now, and the 200 is just below. So that is support until broken. And, it could hold. I mean, if we get that rally, you could see maybe a move up in AVGO before actually breaking down. This one will break down if the rest of the market's going to continue lower. But as of right now, it's at support. JP Morgan, big financial stock. This is kind of the king of the financials. Broken support. We have a sell signal today. So on the uptrend, you've got support, several reactions there. Friday they closed it below support. It was basically broken, and then today gap down and hard sell right to the 200 days. That's broken support. So this is sell the rip. Okay, the trend has changed. This is a sell signal. Now it doesn't mean we can't do a back test. They could rally it up and do a back test or maybe fill this gap or something. Again, that's shorting opportunities. That would be objective areas to short at the gap fill, at a back test, okay, for the next leg lower. XLP, this is your risk off sector, rallied up today, but they're selling into that now. So, you can see XLP still holding support right there. So that hasn't been broken, but definitely getting sold into. Could be a clue that we're going to see a rally in some of those really beaten up tech, like the tech stocks essentially, and maybe a little bit of money come out of this. We don't have that sell signal yet though. So this could just hold support and continue to rally. Keep an eye on it though, because if you start to see XLP break down, it could indicate that there might be a little bit of a relief rally in the tech stocks. Some of the long trades that I've talked about, like Lennar, showing relative strength, was up actually. It got sold into a little bit today, but earlier this morning was actually up about 2.5%. And so, yeah, I think this one still looks good for a long. Could come in for a back test of the wedge, but again, the target right now is about 133.50. So I still see some more upside there. And then MOS, you look at this one, and down a little bit, about 1% today, but it's an inside day. It's a relatively muted sell-off and trading with inside the range of the previous day. So it's just a continuation candle. It tells me that there's really no change here. We're moving up, and inside day today, I think we're going to continue to move up on this one. Now, it doesn't have a breakout because I've adjusted my trend line, but you do have this big bullish falling wedge, and you've got big bullish divergence. So two things that look positive, have to slightly adjust the PPO. It looks like that kind of sold off a little bit, but we have it's a bullish setup for sure. It's just we don't have any like definitive buy signals. So the thing is, it can continue in this wedge. We can just continue to kind of grind around and work our way lower and then break out in the future. So that's why it's not like a full-on long, because there's no buy signals. So all we have is divergence and a bullish pattern. We need to see a breakout. All right, so that's really all I've got. The trolls have been pretty silent, so that's usually a good sign. Well, I mean, it's usually a sign that I think the sell-off's actually probably almost over, because the trolls on my channel come out in hordes when we're kind of at all-time highs or on big up rally days. That's when the trolls will come out and kind of puff their chest up. And then on big down days, or let's say down weeks like we've had, they're just silent. They're gone. I haven't even heard from any of them. They have nothing to say, and they'll wait till we rally again, then say, I'm always wrong. I've always been wrong. I never get anything right. And then, that's just the nature of the haters. But I haven't heard anything from them now. So, I'm kind of leaning towards a rally, but I do believe that rally will get sold into. So I think we rally and then we get sold into and we continue our way lower. I've got a lot lower targets that I think will be hit probably this year. And but we're going to have rallies along the way. And it seems like it does seem like we could rally. Maybe we gap down tomorrow, just a mild gap down, and then rally from there. That could make sense. So, all right, I'll get the video out, and I will catch you guys on the next one. Take care.